What's up, everybody? Hope you're doing well. Why did buyers stall last week, and is bullish rotation still in play? My name is Lamont. I've been a full-time trader for 7 years now, part of the Chart Guys team for more than half of that. And in this video, we'll answer that question and more. So let's get into it. Okay, so starting off with the SPY here. If you'll recall, last week we were talking about the potential of a liquidation break because these lows were very close to each other, right? Whenever you get a bunch of higher highs that don't really see that much follow through, and you have a bunch of lows of the session that are pretty close to each other, it's the setup for a liquidation break, right? It doesn't have to necessarily be new sellers entering the market. It could just be late buyers, laggard buyers getting taken out of the market, right? So any little bit of selling that came under these lows here, because you can assume that there are stops under here, stops under here, stops under here. If you trigger these stops here, they might run all these stops as well, simply because there are lots of stops there very close to each other. So everybody's stop losses, obviously those are sells. And as those sells continue to cascade lower, it can cause a bit of a liquidation break. So then the question becomes, how strong is the selling, right? And how we will evaluate that is always based off of our references, right? There's really no other way to do anything, right? Everything that you do is a matter of analog, as a matter of references, right? So the gap was filled in Monday's session, but they stalled pretty much right at the high of the December 3rd session. And remember, we were watching this guy, 601.33, right? As long as 601.33 is not negated, then the breakout that began on November 29th over here, again, not negated, right? So this selling as of right now, despite it snapping like a 3-week rally or whatever, still is fine, right? These buyers are still constructive here, even though the week was red and all we did was trade sideways. As long as this sideways trade is occurring over 601.33, that's pretty much the best case scenario for these buyers. The next best case scenario remains to hold over 598.16, because holding over 598.16 would affirm this prior all-time high structure now acting as demand. It was prior supply now acting as demand. As long as this structure is being affirmed as demand, then obviously higher prices relative to the prior all-time high structure are being accepted. So that's what we're looking out for next week. Whether or not these sellers will actually press the issue is completely dependent on whether or not they can find acceptance under these levels. Any selling that does not find acceptance under these two levels is just not very strong selling. Okay, so that's pretty much it. And even if these sellers press the issue on the weekly time frame, which actually I think they did, technically it's weekly retracement right now, and there's a lot of space for a higher low over 567.89. So that's pretty much it for the SPY. Oops. Moving on to the Qs here. So to answer the question regarding, is bullish rotation still in play? It's starting to look kind of sketch, right? It doesn't look as good. Right now, the QQQ is the only major sector out of XLV and XLF where the buyers are continuing to advance, and they didn't really advance that much, right? You do have, of course, a breakout, and then on the back test of the breakout point, 526.72, these buyers did hold after a drop and pop there, and then AVGO earnings, a positive reaction to them, gave us the gap and then kind of a hold kind of a day. The low of the day was a miss of 526.72. So again, these buyers are constructive here, but not really by much. And so if you look at the sectors, the major sectors on the daily time frame, recall that the best case scenario would have been for XLF to hold this local area of demand, and you initially hold that, but now you're trading back down into it. So it's not the best look at this point now. Bigger picture, if we're looking at the weekly time frame, here is the last area where there was any kind of major balance, right? So with the QQQ not being that strong and the XLF losing this daily demand zone as support, did I just delete that? Losing the daily demand, this daily demand zone as support, not great. But as long as you don't fill this gap, then this change is not negated, and this is where the last little bit of weekly balance occurred. This guy over here, this little weekly bull flag. So on the weekly time frame, this is really what we care about, right? Can these XLF buyers hold over this guy? The best case scenario, of course, would be if QQQ begins to retrace and come back down into this area. The best case scenario would be for XLF to pop back over 5014, right? Because then that would keep us very strong on the daily chart. So at this point now, it's looking like the rotation is starting to soften here, right? We don't want these daily demand zones to continue to be lost. So at this point now, will we see rotation on the weekly time frame? That becomes a matter of these weekly zones now, right? So for the Qs, it's still fine, right? as long as we're holding over this breakout point, weekly is okay. For the XLF, again, we really care about this guy, right? Can they get back under here? So, you know, if everybody is kind of holding on the weekly charts over their weekly breakout points, then I would say that bigger picture, that bullish rotation is still very much in play. But at this point now, with these daily structures being lost, we do have to be a bit more wary, a bit more careful of that. So on the XLV, it's also showing you weakness, right? So again, you have XLF and XLV retracing right now fairly significantly, while QQQ, while it did rally again, not really by much. So it's starting to look like the rotation is starting to wane a bit. Now, as we were talking about in prior weeks, what we really care about for the XLV is to hold over this guy. So if the QQQ does begin to retrace, does re-enter this area of local daily demand, and let's say the XLF does not rally at all, let's say that the XLF does not get back over this guy, then the next best case scenario, or an alternative okay scenario for buyers, would be if the XLV buyers were to step in here, right? If they were to step in here and defend the highs of this very large area of demand as they did over here, that would also keep bullish rotation alive, in my opinion. So it's a really key spot right now for these major sectors. All right. Moving on to the Qs here. So again, very notable failure for the sellers to not be able to backtest this 526.72 level. I continue to maintain that as long as you're creating areas of demand and breaking out, I'm thinking these buyers are trying to get back up here, or not back, but trying to get up here to the R1 for the year. Sorry, for the month, which is up at 534.52. That's all we have right now, projections, right? Because we're in blue sky breakout mode. So that's really it for the Qs. Do we have trade zones? Hold on a second here. No, I don't think anything hit, at least. I'm pretty sure we were being more conservative, looking for a backtest of this area. So no dice there. I still think it's reasonable. I would prefer for there to be hourly oversold conditions before looking for plays in this area. Just like this was oversold, just like this was hourly oversold as well. Both of these instances had hourly oversold, which again just increases the potential that these backtests will hold. Moving on to the Qs here. I think we're being conservative with the Qs as well. Yeah, we're looking for it back here. I wasn't for these videos, because I only see it once a week, I'm always looking for these retracement plays. I still think I would prefer it over here, right? Like if the buyers are going to fail to advance over here and then drill down through this local area of demand, there's a lot more volume that was established here, right? Throughout this structure, you can see these high volume nodes. So I would still prefer hourly oversold conditions into this area to be looking for to buy these pullbacks. I think pullbacks are still viable, as long as you're holding over these large high volume nodes. It's okay. Like technically the best case scenario would be to hold over this local one, of course, and then just continue to advance. But again, this is the prior all-time high over here, and there's a lot of value established here. I think that even if you were a higher high here, if you were to trade sideways like this, not really that much damage, right? Because it would technically you would have this daily overhead supply here, but if you trade over it again and then up and down like this over this guy, then we're just looking at a much larger area of balance, kind of similar to like this, right? How this looked like it may have just been some problematic supply, but really it's just a larger area of balance trading sideways. That's potentially what we could be looking at over here. And so just like this supply was not a good look, but as long as we held over this guy, technically constructive over this prior high, it's the same concept just applied over here. Okay. So again, I continue to maintain I would prefer looking for those pullback plays over there. Okay, so moving on to the rut here. So the rut, starting to affirm this structure, the all-time high structure, right? This guy over here sitting at the all-time high as supply, as long as we're finding acceptance under the point of control of that structure at 239.19. You can see how this daily lower high set in Wednesday's session pretty much right off that point of control, letting us know, okay, this structure is definitely being affirmed as supply right now. And as long as this structure is being affirmed as supply, the sellers should be trying to negate this breakout. This breakout over 228.63, that should be their objective right now. I don't need this alert anymore. This was for a play for some puts that I bought on 2 Fridays ago. Just looking for a test of this little local area of demand. I closed them out because they were expiring today, and they expired today anyway. So don't need that alert anymore. So space for a daily lower high, and again, as long as we're under 239.19, that all-time high structure is being affirmed as supply. As long as the all-time high structure is being affirmed as supply, objective for sellers, get back under here. All right, so I think this is still a very reasonable trade zone. This is very similar to those responsive trades that we were taking over here, those responsive trades that we were taking in here. It's really just looking for this back and forth kind of situation in which IWM really has the propensity to do. It just does that. It's one of its character traits is to just trade sideways for lengthy periods of time. So like I said in prior videos, would not be surprised to see a back test of this guy. And if we were to just go straight down from here, things would get, I think, on the hourly at least, they would definitely be extended because you're flirting with oversold right now. So I still like this as a trade zone. Just again, only if it's hourly oversold, which just like over here, I'm fairly confident it was. Yep, oversold conditions into this trade zone. That's where we want to be active. Okay, that's it for the rut. So moving on to the Dow here. Okay, so for the Dow, notable retracement. Now we have this overhead supply that is going to be key. This is the new all-time high supply. It doesn't really look like there's much excess there, so that sure looks to me like it's a poor high, even though I'm not looking at it at a profile chart, but not really much of a tail. Typically, when an auction ends, you want there to be a good amount of excess there, which doesn't seem to be the case. Maybe I'll pull up the handy dandy chart that one of our members, David, shared with me, but not now because I have an appointment to get to. Okay, so as I was saying in the prior videos, I'm primarily concerned with what happens over here, right? Like I wasn't so confident looking for a trade zone over here because there's just not a lot of clearly defined structure over here. And I would say that it's much more clear this area of sideways and this area of sideways, really primarily here, right? Like this is our original trade zone from way back when. I still prefer this guy the most just because there's just so much volume traded here. But this structure, the backtest of this guy has already been affirmed, right? I mean, I should say this guy has already been affirmed with this backtest over here holding. So I don't hate this play over here, especially because I think the hourly would be pretty extended once you got into this guy. But I really wouldn't expect a hold here to like rally to higher highs right off the jump. I mean, it can happen, but I would be very cautious with any plays in here. I'd be more comfortable looking for plays over here, knowing that there's a lot more value that was established there. Okay. So lots of space for a daily lower high. Anything under 450, 155 will be good for one. And these buyers don't negate the change of this breakdown now without getting back over 444.66. So this is the new daily no change level from the buyer's perspective. They don't create any change without getting back over 444.66. Okay, and as long as you're holding under 444.66, these sellers should be trying to come here, should be trying to come here. All right, so I still think very reasonable trade zone to be looking for a pullback buy here. Again, in hourly oversold conditions, but that would be enough of a pullback that there would be a lot of space under this supply for the sellers to defend, and there would be space for a lower high. So I would be, pretty aggressive with taking the position off. If you take any trade in here, no later than like 439-ish, where this high volume area is for some partials, I think that would be pretty reasonable. All right. Moving on to the dollar. So the dollar, this is notable, right? These dollar sellers are not really getting anything going over here. So remember, what we care about right now is this big old area of supply, right? This area of supply, which is contained price over here and over here and over here and over here. That's really what we care about. So these sellers, they want to find acceptance under 106.335. And this is very notable to pop and drop over the level, lower low, not see follow through. This should have been smashy, and it wasn't. And then the buyers, boom, pop right back over 106.335 again. So this is the most constructive that the dollar buyers have been ever since way back here. And this battle over here, you could argue, was not as strong, right? These buyers didn't find as much acceptance over the point of control. They spend the majority of the time under it, right? And they got nothing going over the value area high. Whereas this time, you see a higher low and higher high beyond the value area high of the structure. And now you're finding a good amount of acceptance over the point of control. So I still would not be too comfortable playing within this local range. That's me personally, especially if you took the trade from down here. I would prefer if these buyers could make a move higher over here, such that if they were to retest the lows again, retest a back test of this guy, 105.345, if you had hourly oversold conditions on this break, then I would be more comfortable looking for a buy back over the level, throwing our stop under the low of the move, and then looking to chop it up at 106.335. So for me, the dollar is just a wait and see now. Again, especially if you took this trade. If you took this trade and you're waiting for another trade, don't be too eager to get back into it, right? I find that, at least for me, um, there so many times in the past where if I got a banger out of an asset, I would look to get back into it too quickly. And I think it was just like a matter of, again, being too eager. So, I think patience for a decent setup here is warranted, because there's still a decent chance that these sellers press the issue here and continue to maintain this very, very lengthy multi-year balance. So I'm being very cautious of that. I would prefer to see a move higher, such that if we were to fall down here, everything would be extended again. Then I'd be more interested in that. So no real updates for the dollar regarding a trade zone. And if you did this trade, your stop can just be right here, 103.245. If you break out over this high, over 108.070, okay, fine, walk that stop up to under this guy, under this structure, but only after this structure sees some resolution with higher highs. Okay. Moving on to NVDA. So NVDA is now starting to look more and more like a look above and fail, right? They popped over this new high, over this prior high, 140.76. Not really seeing that much follow through. There's a lot of two-way trade here already. And so at this point now, again, like I was saying, it's looking more and more like a look above and fail. And so what we expect to happen after a look above and fail is the sellers should not be trying to test the lows of the range. That's just how balance works. If you're not going to leave the range from, like over here, for example, you're trading sideways, you lower low over here, under this low, you don't see follow through, they try to rotate to the highs. Do we know that they'll always get there? Absolutely not. But is that what they're trying to get done? Absolutely. So for example, here you have this sideways trade, pop up above it, no follow through, re-enter it, come test the lows of the range, don't trade any lower. Higher high, no follow through. What happens? Test the lows of the range, etc. Lower low, no follow through. Test the highs of the range. That's what balance looks like. So, are we doing something like that again, or where we can expect these sellers to try to come all the way back down to 97? It's certainly possible, And so, me personally, that I would prefer to see that. And we haven't had daily oversold conditions in NVDA in so long. Like even this wasn't daily oversold. We haven't had weekly oversold in so long. Like I personally wouldn't mind just staying really patient, waiting for potential daily oversold conditions, which would pretty much roughly align with like where this volume picks back up pretty meaningfully, like in the 127s to 123 area. This is where I would prefer to take like some aggressive trade, but really I would just love an opportunity to get back to size here at like 98-ish. Whether or not we get down there, I don't know, but we could very easily be doing like a very big picture. Remember, many of the other Fangman T names are doing that, so it's not unreasonable. Like this was so long, tons of back and forth for Apple, just kind of how it goes, right? Meta, I think, was doing that for a long time, lots of back and forth. So I would not be surprised if NVDA is now doing something like that, and I would be most prepared for it down here. Again, if you just give me these hourly oversold conditions into here, I'll look for some short-term plays, no problem. But if we're talking about like a location that has the potential for a longer period of holding time, I would prefer to be down here, right? Just looking for this responsive trade. Again, very similar to dollar, right? What we were talking about with the dollar just now. Like why was that trade zone designed as such? Because we were just trading back and forth for so long. The market spends the majority of its time balancing. It's like 70 or 80% of the time balancing. So what does that suggest? That suggests that balance plays are worth waiting for. Okay. Moving on to Bitcoin here. So for Bitcoin, this consolidation is still very healthy. As long as we're holding over this local daily demand zone, 895 for 1.25, I still think this is a pretty reasonable trade zone. As long as you're seeing like these higher highs, it's not even higher highs, but as long as you're seeing breaks over resistances that don't really see that much follow through, it just means these buyers are not really advancing so well, right? Technically, their defense is sound as long as they're holding over this guy, but higher highs that don't see follow through, again, they're just not, their offense is not really that great right now. So if their offense continues to wane and not be too strong here, and then some meaningful selling does enter the market, I would not be surprised if there's an earnest attempt at trying to trade through this guy. And as long as they don't trade through all of this one-way trade over here, like if you pop below this structure, like this sideways trade over here, you pop below it, but you don't see follow through into this, and then you snap back above, then we're probably just looking at more balance like that. So I still like it like this. I would prefer for there to be oversold conditions as always before using this trade zone, but I wouldn't really make an adjustment to that. And as of right now, you can use this guy as a reference, this little bit of hourly supply over here, which was affirmed over here, the low of the range rejected price, the low of the range rejected price. Here's the low of the range. Low of the range rejecting price a bunch of times, pop and drops, value area low. So this guy is obviously key over here, right? Like if you get a break over 102,726.97 with a decent amount of follow through as such, I don't hate looking for backtest plays like this. If you're like a really short-term operator, you want to wait for that break first and then look to backtest this area and this area for a trade, and then your stop is just under here. Okay, basically as long as this local structure holds price, then obviously these buyers are constructive. But bigger picture, I would still prefer to be down here, and even bigger picture, I would really much prefer this, right? Just like this low was just a backtest of this much larger area over here, etc. I would much prefer location here. Like if we can get daily oversold conditions into backtesting this really large area of demand, I think that's a much tastier setup than anything up here, personally. Moving on to Ethereum. So Ethereum still constructive, right? Like these buyers are still grinding the highs of this guy, right? So you're pretty much just grinding the highs of this local area of supply. It's not a bad look, right? Just because, well, I mean, technically, as long as you're holding under 4017.56, then this structure over here, which is problematic for these buyers to go over here and here, is still being affirmed as supply. But that's a very notable selling candle that didn't see any follow through beyond this local area of demand, and now boom, you pop right back over it. So from here, if these buyers can continue to maintain over 3762.72, that's just the high of this local daily demand zone. That would be the best case scenario, right? So I still would prefer down here, like I would still prefer some liquidation here. Ideally, we just continue to trade sideways within this old structure. And if we don't get it here, that's fine. I want to see some follow through over 4017.56 first, and then pretty much look for a play against it. So I would like to see a move like this, rally hard, get extended back into the back test, and then look for a play for this area to hold, trying to get back over here. I don't really care to do anything else with Ethereum. I still would prefer, it'd be great if we can just get another shot down here. If not, like I said, wait for the breakout, then look for a backtest play for the potential to affirm all of this as demand. Okay. And then finally, CCJ. So this is pretty much what I was kind of concerned about, right? The CCJ has a propensity to just kind of trade sideways. It's kind of messy and whatnot. And so I'm not ruling out the possibility that this structure is going to be something like this, or something like this, or even something like this, the prior all-time high supply. Just a whole lot of sideways trade here. Would not be surprised by that by any means. And I would welcome it. I would actually prefer if we can come back down, test this $33 level. That's like a 40% decline from here, but still, I would prefer it if we could come all the way back down here and get things really beaten up. I would be much more interested in picking up some shares in CCJ for essentially a back test of this much larger area of demand. So that's pretty much it. I'm not really interested in using this trade zone again. It obviously already worked quite well for us once already, but I'm not really too interested in using this guy again. So just be mindful of that. I would just stay patient, wait for some daily oversold conditions, and then look for a play, maybe down to 42 first. So like just take all this setup down here and see if we can drill down here first. But I'm just, this is a wait and see for me. If you wouldn't mind doing us a favor, hitting us with a like or subscribe if you got anything out of this video, we would appreciate that very much. It's free to you, doesn't cost you a thing, and it's very helpful for us. And that's pretty much it. So hope you guys enjoy the rest of your weekend. Appreciate you sharing some of your time and energy with me, and I hope to see y'all next time. Farewell.